General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. This month's going quick. Monday the 9th, 2/9/26. Retail sales tomorrow. Get the delivery. It's New York reversal. New York came, swept. It's textbook. New York reversal. Take a profile. Let's look at the hour. It's too close to previous day's high. It's PPR. Seems like the likely draw. You have SMT here as well. Logically, it's see if we can use this to go up. See if I can put an arrow in here. Let's see if we get arrow. What is this for tomorrow? Probably retail sales. I seen on TraderView. Let me double check it on Forex Factory. Retail sales, all that stuff. So retracements and higher prices is the plan. Retail sales should be good. They said consumer spending is up. Prices to target BPR. Man, it's been a minute since I even typed BPR. Word. Previous week's high does look interesting. Has this nested here. Closing above that's a big deal. Low hanging fruit objective will be previous, not even previous day, but when it stays high. It's up candle too. Up candle. See if we get a reaction there. It's kind of like an order block. We don't know. We got bullish still though. See where that fits in the picture. Fits right here. We have a order block candidate. Mm, if we react at the open price, we could see a reaction, or we could see a retracement to new week opening gap. Let's look at SPX. Mm, this low was created at a different time, so this is a week low, and it's SMT. Okay. each one looks like. See if this gives me OTE vibes. Just right around previous day's high. So I'm gonna mark this as Friday's high. Plus discount range. Discount Monday range. Bam. Yeah, because that's gonna get removed. And we can just keep that there anyway. If I could see it. I would set an alert there, but that's where I would look for a bounce to target previous week's high, which is low resistance to get to. There's nothing stopping it. Let me try to make this big. Idea here is to see price return to discount. Pair with Friday's old high. See if we get a bounce entry to target previous week's high. Yeah. So here. It's Thursday. This is Friday right here. And that makes sense too. How we started off. Previous week's high does still make sense as well. So far we've been real bullish. A retest of the week opening gap will be good enough for a long. Alright, did the framework play out? Yeah. What did I learn about the patterning? Getting used to the volatility. Yeah, watch for tomorrow news. And more buys. I don't like the way this day bought. It was kind of slow, but still a continuation makes sense. Maybe after a good retracement. All right, that's that on that. Y'all have a good day. Peace.